The market is showing some indecision at the current 22,600 to 23,800 horizontal resistance. We're going to go ahead and discuss the short-term price action today and run a full technical analysis for Bitcoin on the macro and the short term. Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a great day. We're going to be doing a complete technical analysis today, discussing the structures, but more importantly, a variety of different indicators on the small time frame and the macro to discuss two things: the overall trend and the strength of the trend. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel if you are new here. We do daily technical analysis videos on Bitcoin, the broader markets, and so much more, guys. Everything is factual, objective, and data-driven. We don't rub emotions in. We talk purely about what the charts are telling us, and we give the best possible advice based on the TA. You can also join our Telegram channel. That will be the second link down below. You get access to all our charts, updates, analysis, videos, information, news events, and so much more in here, guys. If you're interested in joining our VIP channel, you can get access to all of our trade signals, analysis, information, and exclusive altcoin trades and Bitcoin trades with entries, targets, stop loss. Everything is set out and laid out for you. You'll also get access to our group chat with all of our members in there. Let's go ahead and dive into the charts. And like we said already, Bitcoin has reached a major resistance. As you can see, this level here is labeled as resistance. This is going to be our first level of macro resistance, and we'll come back and discuss that in just a moment. But before we do get started on Bitcoin, we'll talk about what the markets are looking like and the traditional markets. So starting with the market data, we can currently see Bitcoin is up 37.13 for the month, and we have seen a little bit of indecision in the market over the last couple of days. We are kind of hovering around this 22,600 support level, this resistance support level now, not really making any decisive moves. We are seeing indecision. We're seeing long wick body, small bodies with long wicks on both prior candles, which was yesterday and the day before, indicating again indecision, potentially slowing down on the trend. And when we start to see this occur at resistance after large moves upwards, it can actually indicate weakening of the trend, and therefore potential pullbacks could actually result. So we are looking at that under a microscope here, and we'll look at it today in regards from a technical standpoint to discuss what are the likelihood that this is actually going to result in some sort of pullback, because from a candle perspective, we are starting to see glimmers of weakness, and more importantly, indecision and weakening of this uptrend at this resistance level. And like I said already, when we start to see this occur at resistance, the likelihood of rejection is increased, essentially. Okay, so 37% volatility is 2.15 on the 30-day period. That should increase over the next couple of days. We are seeing 24-hour volume. You can see in the top left-hand corner of the screen over here, down 20% to $80 billion. And of course, as volume decreases, liquidations naturally do also decrease at 111 million, down 37%. You can see that over here, 111 million down 37%. And we've had a nice even spread over here between longs and shorts on these liquidations. If we go ahead and look at the last 12 hours, we can see a nice even spread between longs and shorts over here have been liquidated. We have some large long liquidations and large short liquidations in the last week. But if we look at the last couple days, we're more even between longs and shorts in the liquidations we are seeing. And again, indecision in price action, tight consolidation, compression at resistance. It usually does pull and push both ways until one way cracks and it continues. But during that chop zone, a lot of people do get shaken out. Whether you're in shorts or longs, a lot of people do get shaken out. And therefore, like I said already, it's not the time to be taking massive leverage positions. You should have already bought Bitcoin. If you wanted to buy Bitcoin, our Bitcoin entries were at 17,600 right over here, and again at 19,200 on the POC level break over here on the VRPV. A nice little rally. Buying Bitcoin up here right now is not the best idea for the short term. If you have a macro outlook and you look at the 4-year cycle, according to the 4-year cycle, yes, we're most likely to continue upwards and most likely to be higher than the price we're currently. But if you're looking for the best possible entry, I would not be advising now in terms of the risk return. But let's talk about the broader market. So the DXY, it has dropped down. It's coming very close to our target of 101.35. It is again on that downtrend. We did have this pennant formation over here We had some liquidations upwards and downwards over here, some fake outs. We can ignore these points here. We're broken down from that pen and taking a measured move of that pen and takes us down about a percentage. You can see that takes us down to this trend line. So the next support level is around 101.3. We do expect that to be reached for the DXY. If the DXY continues to drop today, we can potentially see Bitcoin move upwards just a tad. Looking at the broader markets, we are looking at the Dow Jones over here. We are still in that resistance range. Not a lot of movements over here, guys. We really aren't seeing a lot of movement on the stock market in comparison to Bitcoin. Bitcoin has been absolutely flying, but generally Bitcoin does move first. It bottoms first, it tops first, it moves first. We generally do see the stock market move a little bit later than Bitcoin, as completely expected in bottom phases. So looking at the stock market over here, we do see the Dow Jones in this area of horizontal resistance. We do want to see a drop below this local low for any sort of continuation to the downside to occur, targeting 32,000, targeting this downward trending resistance. Moving towards the upside, guys, if we do clear these local highs, more importantly, 35,000, we will see a continuation, a strong rally up to 36,000. Again, that will mark the bottom. We'll continue quite aggressively in a macro uptrend. Looking at the S&P 500, we are still underneath that resistance. And again, whilst we remain under this resistance, we do need to be a little bit more cautious about the markets, because again, the Bitcoin price is about 70% correlated to the stock market's price action. There's about a 0.7 degree of correlation coefficient. And again, these are tied to each other via the strength of the dollar. So generally, when the strength of the dollar shifts up or down, we see that influences the stock market, and then Bitcoin is influenced by that as a collective. So generally, if we do see the stock market dump, we are more likely to see Bitcoin dump as well. If we see it pump, we're more likely to see Bitcoin pump as well. There are exceptions to that fact, because like I said, it's only a 70% correlation, but more times than not, we do see them moving in conjunction with each other in the same direction by different amounts. So look at S&P 500 here, we are wanting to see it break over this downward trending resistance as well as these local highs here. To create this bullish momentum, we need to push upwards, and that of course will bring Bitcoin even higher, and it'll be very, very bullish for the markets, marking the bottom, of course, as the S&P breaks out of its downward descending expanding wedge, which of course is a bullish reversal pattern and is actually visually representing the entirety of the bear market we've been in for the last X amount of months, okay, particularly for the stock market. So breaking upwards here, incredibly important and incredibly bullish. Breaking towards the downside, again, we do have as well support. If we lose this trend line here, I think we are in for a world of hurt. We can definitely continue back down to 3,600, but I think it's incredibly unlikely. I think it's more likely we go up. But again, while we remain in this pinch zone, and by pinch zone, I mean this tight range between resistance and support, we do have to be aware of all scenarios. Betting on one scenario here for S&P 500 is a little bit risky. You should always wait for that break upwards or the break downwards to take that position. We're looking for a daily candle close, the body of the candle to close to confirm that direction, okay? Looking at the bond yields, we are at support here on the 10 years. We are at support here on the 2 years. Again, potential bounces coming. Who knows? If it does bounce, DXY will rise. Bitcoin and stocks will more likely continue downwards. Let's talk about Bitcoin on the smaller time frame and the macro, and we'll start on the macro really quickly. So looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. As we discussed yesterday, we'll reiterate what we talked about yesterday for the new viewers to the channel. Bitcoin is in a reversal movement. This is a reversal move. What I mean by that is we have a breakout of a falling wedge, okay? And this is a falling wedge we talked about weeks ago. we were talking about the falling wedge all the way back in this range over here. We said if we break out the falling wedge, we're looking for a first target of 22,500. You can see this is our Telegram post over here in the free channel. We post this, 22,500 was our first target from the breakout of the wedge. We did actually see that. So perfectly reached as per that falling wedge structural analysis and breakout target. The question is now, will this reversal, because currently guys, this over here is a reversal. Will this reversal develop into a macro uptrend, or will it not? Will it reject and come back down, find support, and have another leg up? Okay, there's no doubt in my mind that I think Bitcoin has bottomed. I definitely think Bitcoin has bottomed. I definitely think any sort of pullback that occurs will result in a healthy correction before the next move up. The question isn't have we bottomed? The question is, at what point now is the best time to look to enter Bitcoin? I think that's the way we should be looking at it. Again, right now, this is a reversal structure. We've moved that reversal structure and the falling wedge, completed the movement target of our resistance range. We're at resistance. So the question is now, will this resistance zone facilitate a continuation upwards, turning this reversal into a macro uptrend? Okay, this is where the macro uptrend initiates above this resistance, okay, and potentially a bull market above our 30,000 level, okay? Or will it result in a rejection, continuation down, potentially healthy correction, or worst case scenario, even further down? Again, whilst we remain underneath this resistance, we are technically not in a macro uptrend, and therefore we could still see new lows. The chances we see new lows, guys, incredibly slim, very small chance, but we do have to be aware until we create a macro uptrend, we are not in a macro uptrend, and therefore this whole entire move is nothing more than a large breakout of a falling wedge structure into resistance. We do have to be objective with our analysis, and we do have to talk realistically about what is going on. Now, as you would know, guys, we already have Bitcoin. We bought Bitcoin a while ago. We have our spot bags. If it goes up more, we profit. If it doesn't matter. We short-term scalp it on the way down. Everything is perfectly fine. But we do have to be objective with our analysis and aware of what is going on. The reason I say the macro uptrend starts above this resistance is because this is one of our largest resistances on the Bitcoin chart currently, as well as our 2020 pinch zone before our bull market really started to kick off into that first leg up for Bitcoin, and then obviously our second leg up. Looking at 30,000, guys, that is going to be the yearly low for Bitcoin, the resistance level that Bitcoin does need to break through to see a bull market start. As per the 4-year cycle, guys, we can see it play out on the 4-year cycle. Every time we break through yearly lows, we enter a bull market. Looking over here, and 28 to 30,000 over here. So I'll show you one more time. Monthly close above the yearly low over here, bull market. Monthly close over yearly low over here, bull market. We can expect that same thing to occur. So just to one more time to reiterate it, reversal structure, reversal pattern. Breaking through this resistance equals a macro uptrend, okay? Breaking through 30,000 equals a bull market. That is when the bull market will start. It doesn't mean the bull market is going to go parabolic. It does take a long time for the bull market to warm up. Look how much time, guys, it takes for the bull market to actually start warming up before we get that parabolic rally. It can quite literally take 8, 10, 12 months for that bull market to start warming up. But what it means if we break a monthly candle above 30,000, according to the 4-year cycle, we are not going to break a monthly candle back below it and close below it, okay? So if that strong base of support developed, and obviously an uptrend can develop and continue from there, and a bull market will eventually arise. So let's look at the macro in regards to our technicals. Let's delete everything off the chart and talk from a technical basis. So starting on the 7-day chart, let's really start on a large time frame and come down to the smaller time frames. So if we look at our VRPR here, guys, we can see a huge chunk of support below us. We have a lot of support over here. We have a lot of support over here. These support levels are sitting around 17,000, okay, and our peaks around 19,200. This, of course, is our POC, a point of control, our largest point of support on the chart in terms of historical support volume ranges. It extends down to that 2017 all-time high. You can see ever since then we do slope a little bit in that. It is starting to slope downwards again, indicating a decreasing amount of historical trading volume. As volume decreases historically in this trading volume ranges, we have historically smaller and smaller amount of orders. Therefore, we have less and less resistance to push through. If we have bullish momentum and large amounts of volatility, it is very easy to push through those ranges if we are on the top side of these supports, which we currently are. As you can see, if we zoom in, the next area of resistance is right over here. Okay, this is that 22,600 to 23,800 range. The current range we are retesting. We are currently in that resistance, okay? Breaking through our resistance, you can see we slope downwards until we reach around 25,000, okay? 25,000 will act as a temporary buffer. Again, a point of which we will either find temporary resistance from, or will be the trigger for a massive continuation upwards to 28,000 to 30,000. We'll get that next area of resistance. So from volume ranges, very straightforward, guys. Looking for those triggers, looking for those points of resistance historically, looking where the price will continue from or potentially reject from. We can use a VRPV to do that exact analysis as we have done in the past. So very accurate tool, very important tool to use when looking at historical price action. Let's take a look at the RSI on the weekly, as well as some other momentum indicators such as the MACD. Okay. So, RSI on the weekly. We obviously had the breakout on the weekly chart here, looking very, very good. We not only had the breakout on the weekly chart, I'm just going to go ahead and hide this really quickly. Which one is it? Oh, wrong one. Sorry, guys. There it is. Okay, so not only did we have the weekly break on the diagonal, which obviously shifted the momentum positive, because when we're looking at diagonals on the RSI, it's not relative to price action, right? It's a derivative of price action. So it's not telling us what the price action is doing. It's actually more importantly telling us the speed, velocity, and momentum of the price action. So when we had these long-standing diagonal resistances, and then we have these breakouts, what this breakout actually represents isn't a breakout in price, because generally the RSI will break out first before price. What it represents is a shift in momentum. And in this instance, it's a bullish shift in momentum as it shifts upwards. So we have a bullish shift in momentum and price action generally follows. If we actually take a look at where the RSI broke out of, it broke out right over here. Look where the price action was when the RSI broke out. It was still down here. It hadn't even moved yet. So it was a good indication that the move to come was going to be upwards. And this is what we were saying the entire time. We're watching the 7-day RSI break. In fact, we were talking about the 7-day RSI break this entire time over here. For months, we're talking about half the year, we were talking about down over here. Okay, very important to understand how momentum shifts and how these shifts can actually influence price. Not only did we see that, we saw another thing. We saw a horizontal break of the top point, the top local top over here, which was a 52.75 or 52.35. This level corresponded with the local high printed here. Why is that important? Because this was our 200-day SMA rejection point. The first time we've ever broken over this momentum resistance here, whilst we've been over the 50 EMA and outside of the downward sloping resistance of our channel, which is our bear market resistance. This was, of course, our bear market resistance. Look at the prior time we retested that, which is over here within the bounds of this diagonal resistance. We broke out of it outside the bounds of the diagonal resistance, again indicating a potential reversal is in play, which it is, and a continuation higher can actually occur. That doesn't mean we're not going to see a pullback. It just means if we do pull back, we do have a positive shift of momentum, we are in a positive trend, it is more likely to see a continuation upwards after a healthy pullback, okay? More likely to see a continuation upwards after a healthy pullback. That is what it indicates. Looking at the MACD, and I want to start on the 14-day chart for the MACD, as we were taking a look at the 14-day chart about 2 weeks ago. Now, 2 weeks ago, we looked at the 14-day chart and we said, guys, bearish momentum has been dropping since June. Bullish momentum is rising, the downtrend is weakening. We were saying that 2 weeks ago. Actually, that was my most disliked video for like 6 months. When I said the bearish momentum is decreasing, the downtrend is weakening, we're more likely to go up. That was my most disliked video for over 6 months. Can you believe that, guys? Because the bias at the time was incredibly bearish. The bias was saying we're going to go to 10K. In fact, we did the opposite. We can see a very clear decrease in bearish momentum. We have now flipped positive. We actually have positive bullish momentum now. What does the MACD tell us? Ignore these moving averages. Look at the volume ranges. It tells us the momentum, or should I say, the momentum currently versus the previous bar, or previous, well, in this instance, previous 14 days. So now we have a green, what it tells us. Green is positive, red is negative. Very simple. When we have deep red followed by deep red, it means an increasing or decreasing or increasing bearish momentum, so decreasing momentum overall. If we start to see light red appear, followed by light red, followed by light red, it means in comparison to the prior 14-day period, we have now seen less momentum in comparison to the prior 14 days, and that is represented by a decrease in these histogram volume bars, which are decreasing. So it's showing us a decrease in bearish momentum. We have now flipped. We have now seen an increase in bullish momentum as we have flipped that 0 point on the histogram. Therefore we are in this bullish territory. So very interesting, guys, and very important to look at. We are technically having bullish momentum on the larger time frame. We can go ahead and extrapolate that to a smaller time frame and see how we're doing here on the 7-day chart. We should be continuing through. So again, we are very much in this aggressive uptrend. We do have bullish momentum continuing and increasing as the periods go along. It'll be very interesting to see what happens. We are looking for periods of which we will see a decrease. So generally, when we see decreases on the smaller time frame, it can signal a shift in momentum again, using the RSI to predict potential reversal points. So we will be looking at on the daily chart now. Let's take a look on the daily. So we are starting to see a weakening in the momentum. Again, this is not of any surprise, guys, not of any surprise. Like we said already, the daily charts are showing indecision. We are starting to see indecision pop up on the momentum over here, and we are starting to see a slightly decrease. And again, we are losing bullish strength on the larger time frame. We are losing bullish momentum. We are seeing indecision at this resistance. It doesn't mean we're not going to go up. It just means we are at resistance and we are likely to see some sort of pullback at this level. If we're going to see a pullback, guys, it's going to be at this level. If we're not going to see a pullback, we're not going to see a pullback. But if we're going to see a pullback, it's going to happen from that resistance range we're talking about. Let's go ahead and quickly discuss the short term. We are in a potential bull flag formation here on the short term, which again is a bullish pattern. The measured move will take us upwards from breakout point around 23,400. Again, nothing too important. Unless we break over 23,800, 23,400, this current resistance range is still intact. So realistically, Bitcoin, like I said yesterday, can go up higher. It can definitely go up higher and still reject from those levels, okay? If we're looking for a pullback can quite literally happen anywhere between 22,600 and 23,800. This entire range here is horizontal resistance, okay? It can theoretically happen within any area of that range. Looking at the short-term price action, of course, from a structural stance, we are, of course, in a potential bull flag, which is bullish, okay? We do have to keep that in mind. Looking at momentum, like we said on the larger time frame, we're definitely starting to lose momentum. Like we said, daily chart, we can see bullish momentum decrease. Looking at the 4-hour chart, we can see bearish divergences pop up. We have increasing price, decreasing momentum. Again, this corresponds and confirms what we're talking about with MACD. We are starting to see bullish momentum decrease. This, of course, could result in a continuation downwards at some point. We are going to be looking at smaller and mid time frames over here, looking for breakdowns of the 50 EMA, particularly on the 3-hour chart. You can see with massive retest, losing the 50 EMA on the 3-hour chart will result in a continuation towards the downside. Looking at the smaller time frame, we can look at local lows, such points of this over here. Losing this level again will result in a continuation downwards. I think even invalidate this descending potential bull flag. So again, losing this level could even invalidate that bull flag and take us much lower. So keep an eye on the charts, guys, on the short term, on the macro. We're going to go ahead and end the video there. We'll talk about this again tomorrow once we have some more price action. Again, keep an eye on that macro level. Keep an eye on that resistance range. Look at the price action. Don't feel FOMO'd. I had so many people ask me in the last few days, MegaWhale, should I buy in? Should I buy in? I'm experiencing FOMO, blah, 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 blah. Calm down. Just calm down. It's not the end of the world. If you didn't buy at 19K, if you didn't buy at 17K, you didn't miss out on much, guys. Zoom out your time horizon. Would you have been rich if you bought 2 days ago or 3 days ago? No, of course not. Of course you wouldn't be rich. You make 20%. It's not, you wouldn't have put all the money you have into the market, okay? And if you did, you would have exposed yourself to a stupid amount of risk and you would have been an idiot, okay? You got lucky. The bull market hasn't started. The macro uptrend hasn't started. The altcoin rallies have started slightly, but in the broad scheme of things, altcoins go up thousands of percent in bull markets. Hardly have we even seen that. There is so much time to make a hell of a lot of money in the bull market. Don't stress out now. Now is still accumulation. Now is still planning. You should still always make the best possible decisions. looking as a trader, you can always go back in hindsight and say, I should have done this, I should have done that, I wish I did this, I wish I did that. And you could be like, oh, I'm doing so bad because I didn't do that. It's not the reality. The reality is you can only make the decisions you can make in the time that you're making them. If you don't make a decision, you didn't make the decision. Focus on what you can do now and what you can do next to better your situation, rather than leaving your emotions and spending your energy focusing on what you haven't done and what you didn't do, okay? That will just cause emotional trading. That will just cause revenge trading. That will damage your future decisions because you're worried about what you didn't do and you need to make back money you didn't even lose, okay? Focus on the future, not the past when trading, or you're always going to be trading and chasing rather than looking and accepting opportunities when they arise, okay? I'll leave the video there. If you've got any questions, leave them down below. And of course, see you tomorrow. Cheers.